Good evening, everybody. Hope everybody's having a nice fall evening. We had 69 degrees here in Pittsburgh. Tomorrow it's going lower. So one of the major aspects of candlestick analysis is the fact that it has probabilities that put us in the right direction at the right time with a high degree of probability, which is the whole purpose for my getting involved with candlesticks. Because what is it that kills most of our trading? It's our own emotions. So I was a stockbroker. I got out of the business because I realized brokerage firms didn't have any more idea about what made prices go up or down. And every time I put on a trade, it was all done on emotions, from rumors, analytic or analysis from an analyst that had no more idea about what made prices go up or down. So what I discovered was, as I was learning the common sense aspects of candlesticks, there was also elements to it that if the signals work, because we were looking at them 400 years after the Japanese race traders have developed them, that the signals told you there was the probabilities that prices are going to move in a certain manner. Same thing with the patterns. That we were looking at patterns because human nature works the same way time after time. And then there was what we discovered 20 years ago was, or 15 years ago, the T-line, the exponential, 8 exponential moving average. So that's why our training on Triple T this weekend is a dramatic, that's not the right word, is a relevant trend indicator that helps us eliminate our emotions. So we know there's the T-line rule that works on any time frame. Basically, it says the further away we move from the T-line, the higher the probability it's going to come back and test it. And we saw that back a while back in Tesla. The further away you move from the T-line, the higher the probability it's going to come back and test it. So we have things that kind of control our emotions, because when it's trading through the roof, what's the first thought of most investors? It's just going to keep right on going. We know that at some point it's going to turn around because of the factor it's moved, that one element that you moved too far away from the T-line. And so we have methods for taking advantage of that information, which is basically we'd go to our 10-minute chart and stay with it as long as it didn't close below the T-line, and that's where we would have stopped out, well up at the top of the range. So, Marcella, it's my best friend too. I tell people, I made good money, and good money for me was going from being a consistent contributor to the markets. Now I was starting to make a little bit of money, which was a drastic change of what I was doing before. But then when the T-line came along, it greatly enhanced my profitability because it kept the emotional aspects out of my trading. First of all, it allowed me to see exactly when it was time to enter a trade. The T-line creating the fry pan bottom or vice versa, we knew when it was time to buy. Again, how long did we hold this? We would just go to our 10-minute chart. And the 10-minute chart would tell us exactly when the profit taking started. being recorded for future reference? Yes. All these evening sessions are recorded. So not only does it tell us when to get out of a trade or when to get into a trade, it also tells us how to maintain that trade. And that's an important aspect of our emotions because I know there's tons of you out there just like me that if I was in a good trade, my next fear was, boy, I'd look pretty stupid if this turned around and went back to where I bought it, which is usually what would happen. At least now I have a format to tell me I can stay long, and even though I might see sell signals, we have the simple rule that you stay long as it stays above the T line. So in the days prior to the T line, I might be taking profits here because I can see a sell signal and it might be ending the trend. And if it keeps going up, I can always buy it back. But usually I took that money and went and found another trade. So that one would keep going. Now we have a very anxiety-free trading method that basically says if it stays above the T line, you can stay long. If you decide to take profits, you can always see what it does at the T line. It gives us the exact timing. If I see a kicker signal coming off the T line, I can be buying. Where would I be buying? Again, that's where you go to your 10-minute chart. And notice what the 10-minute chart told us. They couldn't close it back below the T line. So the T line works on all time frames. If I see the daily chart working, a lot of people say, well, I don't want to chase this. I don't know what's happening. Well, if we use the 10-minute T line, we can see multiple things going on as far as this chart. When to stay in, when to get out. So we can use the same analysis of what our signals are telling us and what the T-line distance is telling us. This just helps keep our emotions from taking profits too soon or hanging on too long. All right, so here is one major factor that we call the T-line probability factor. That when you see a candlestick sell signal, like we saw in the Dow, Doji gap up, that was our alert. Doji, hanging man, and a close below the T-line. There's one thing that you can assume with a great degree of confidence. That if you see a candlestick sell signal to close below the T-line, you can assume that the probabilities are that you're in a downtrend. Now, the first thing, can you explain number 4 in the previous slide? Let me see what number 4 is. Oh, that number 4 was that if I sold here, because that was the profit taking, I know the probabilities are pretty strong that I don't want to be back in this trade until it comes back up through that level. Because here's the assumption. Again, these are all points that we're going to be leading up to for our weekend 2-day training. These are all just probability factors that we can analyze by what human nature does. So if this was Shake Shack, or if this was soybeans, or live cattle, or the dollar, I know that when I start seeing sell signals off my 10-minute chart and I start taking profits, I don't get back into this trade until they break up through this level. Because just think of the let's see, what do I want to say? Just think of the logic. But if this was the area where you started seeing profit taking, what's that mean? That means it's hit the area where the bulls and the bears are now in equilibrium. And so if it comes back and stays, or if it doesn't come back up through that level, that meant they took it up, came into the equilibrium. You don't get back in it until it gets back up through that level. Hope that was. Now the black line is the T line. This is the reason we call it the T line. It's short for trigger line or trade line. Again, a very simple analysis. You can, if you see a candlestick buy signal and a close above the T line, you can stay long as you don't see a candlestick sell signal and a close back below the T line. So let's see, I'll go through these real quick for people that are new here. You've got the red line, which is the 200-day simple moving average, the blue line, which is the 50-day simple moving average. We put those on our chart because every major money manager around the world uses those moving averages to make their decisions about their portfolio positions. So we're not putting them on there because we're watching to see what happened or make our decisions. We're waiting to see what everybody else's decisions are at those levels. The black line is the most important one. That's your T line. I could take everything off this chart and use stochastics and the T line and trade very successfully. Anything else that I add is just kind of confirming, and as you can see, it's not a real cluttered chart because the main factor for buying and selling is analyzing the signals. Everything else becomes a confirming indicator. The little green line is the 3T line. Works in conjunction with the T line. And again, if the price starts moving too far away from the T line, then the 3T line starts kicking in as far as relevance. So here is the assumption. Kristen, you can use whatever you want to. I use, when I'm trading intraday, trading soybeans, cattle, hogs, or whatever, I'm using the 10-minute chart to tell me that's my bellwether. When I see that it might be setting up, then I'll flip down to the 5-minute chart to make sure the 10-minute is still confirming. So you can use whatever time frame you want, depending on how active you trade. Somebody that might be trading the dollar on a much slower basis might use the 10-minute, 30-minute combination. So, and it's not difficult. I mean, you can flip through your charts very quickly to see which time frames. Again, Dan, that's up to each individual. Again, I've gotten very accustomed to using the 10-minute chart. And I'll flip, when we go to live charts, I'll show how I do that. But here's the assumption right now. Notice the sell signals and a close below the T line. Anytime you see a close below the T line, the assumption is you're in a downtrend until you see a candlestick buy signal and a close back up above the T line. Do these lines hold up on the 1 minute? Yes. Back in my younger days, I used to trade the E-minis off the 1 minute, 3 minute, 10-minute combination. So these all work, the signals work just as well in the 1 minute as they do the monthly. Because the definition of a candlestick signal is that it's the graphic depiction of everybody buying and selling during a specific time frame. So it works on all time frames. So the reason I'm pointing this out is how much time do you spend trading each day? Or because I've got so many things going on, like being in the chat room, analyzing what other chart setups are working, I can put on a trade because I've got my commodity trades over on the third screen. And once I put the trade on, all I have to do is watch the chart. So I might be in on a day trade basis, maybe 2 to 4 times a day off the 10-minute chart. You mentioned a few days back you thought of putting on a day trading. Yes. Yes, and we'll schedule that in, yeah, probably within the next week or two, Marshall. Again, we do a lot more sessions than we do in the summertime when it's nice and warm outside. When it starts to get cold and crappy, we'll be doing more Tuesday and Wednesday night sessions. If you're not able to day trade due to full-time job, are we able to use the technique on a week? Yes, this works, Stephen. This works on all time frames. So you set up the trading program that works for your schedule. So if you can't trade during the day, then you do what I do as far as my schedule. If I couldn't trade during the day, then I'm going to be a swing trader where my trades are going to last anywhere from 2 to 10 trading days. And then that means every night when I get home from a job, I can spend 20 minutes to analyze what charts to be adding or subtracting. So obviously, the time frame that you can trade is based upon your own schedule. Oops, Joseph, Heiken Ashi is a vanillized candlestick. I would use it mostly for longer term. I have a hard time staying with the trend, so I thought I may want to combine the T-line system with Heiken Ashi. Heiken Ashi, again, is a vanillized method of using candlesticks, and it's usually better for the long-term investor. What are the settings for the 3T? It's the 3 exponential moving average. On the Dow chart, will you re-enter only when it breaches? I don't know where 65. I'll re-enter when I see a buy signal and a close back up above the T-line. Norman, I helped write some of the formulas for Heiken Ashi for a group of doctors in Texas, probably 15 years ago. But again, Heiken Ashi is the combination. It just shows you the trend. The reason I use the T-line is in 40 years of trading, using all technical indicators, Bollinger Bands, Fibonacci, trend channels, anything you can think of, I have used. But the most effective is this line right here, the T-line. And the reason for that is, the way I describe it is, the T-line acts like a natural support and resistance level of human nature, kind of a Fibonacci characteristic. So here's what has dramatically improved my trading. If we know the candlestick signals or the graphic depiction of everybody buying and selling during a specific time frame, or giving you an immediate measure of investor sentiment, and you can add the T-line, which is a natural support and resistance level of human nature, when you combine those two, that is your most powerful, accurate combination. Now, does that mean you ignore Fibonacci retracement or anything else you want to add onto your chart? Definitely not. You can add that onto your chart. And I tell people the important factor that we're looking at candlestick signals are the signals themselves. Everything else becomes a confirming indicator. How far back Could the market pull back? Don't know. When we go to live charts, we can put the Fibonacci retracements and see what levels it could pull back. Now, does that mean it's going to pull back there? Have no idea. But if we see it pull back to one of those levels and we see a candlestick reversal signal, then we know that's the level that everybody was starting to buy again. Again, any indicator we put on our chart is something that everybody else is watching, and we're just watching to see what type of signal is created at those charts or at those levels. What are your thoughts about Heikin-Ashi to smooth the candles? You can use it. Yeah, I just don't use it because they're too vanilla, and they, because I'm a swing trader, they react too slowly for when a reversal actually has occurred. So it's going to give you the trend, but it's going to be less effective as far as getting you out close to the top or getting you in close to the bottom. What do you think about long-term trading for keeping the emotions away better than day trade? Again, that's up to each individual. If you're a long-term investor, then you use different parameters. Maybe you use the 50 as your trend. Okay. So here's the important point I want to make right here. Is the T-line probability factor is with a close below the T-line, the probabilities are pretty strong, not because it's a pullback, but what we're doing is seeing a graphic of what investor sentiment is doing. So we've got investor sentiment knowing that if we close below the T-line, the probabilities are heading lower. Same scenario on the NASDAQ. Notice that the NASDAQ was up 81 points today. Now, a lot of people think, well, that's pretty bullish. What can we see? We can see it was trading below where it opened, which means there wasn't any buying, and they still didn't close back up above the T-line. So everything we can analyze is when there's a change of investor sentiment and when it's being confirmed with an additional probability factor, that told me right up here, especially our left-right combo, after the gap up doji in the overbought area, I'm starting to close out positions on the long side that are starting to look a little bit squeamish or may have shown a sell signal and a close back below the T-line. So does that mean everything is going to sell off in this market? Once again, the advantage we have using simple scanning techniques in identifying the trend based upon the T-line is we can see which sectors are acting the strongest. We've been recommending the electric vehicle sector again. Look what happened last week on Lucid. There was your fry pan bottom holding up above the T-line, and then a trend kicker signal. You add all that together, it was time to be buying. Now we've had an uptrend. What was our indication to stay in this stock? Because even though they sold it off, look at the elements that told us that this was not a reversal. First of all, that's not a candlestick reversal signal. That's just a down day and an uptrend. Then the next day they took it down lower. But what was our final criteria to tell us it wasn't time to get out of this position? Because they haven't closed it below the T-line. That little factor right there has saved my butt many times. That as long as it doesn't close below the T-line, that means we're still in an uptrend. Gary, I don't use the Show Me Cloud. I tried using it years back, but there was no real correlation. All it told you was there was the direction it could go, but it kind of it's kind of an indicator that doesn't have say probability factors that dramatically improve your analysis. It's just telling you where this could go. And again, this is the combination that is extremely effective, is just staying above the T line. Everything else you add, you just kind of use that as a confirming indicator. I plan to use longer term swing trades, not day trades. Yeah. So figure out the combination. In that case, if I'm a longer term swing trader, I'm using the daily charts. And then if it starts moving too far away from the T line too fast, I flip to my 10-minute chart. Do you wait to near close even with the 10-minute charts to make the trade? You wait to near close even with 10-minute. Norman, I don't understand. Do I close out positions or add positions at the end of the day? I usually don't add them. I'll use the charts to tell me if that stock is not going to work to close out a trade. For momentum trading, I use 3, 5, 8. Use whatever is effective, Vic. On a daily, in the regards options are following, set up on a daily chart for following day. You said it needs to trade positive or negative depending on the signal pattern. Which time frame do you use to execute the order? Mac, I'll show if I'm buying, for example, we were buying the call spreads on Blink going into the close. Now show why. But I'll still use the daily chart. Now, if I think they're buying going into an earnings report and I see it moving up, yeah, I'll flip to the 10-minute chart real quick and make sure they're still buying. Again, everything I do is based upon the signals and the patterns, whether you're trading off a 1-minute, 5-minute, 10-minute, or the daily chart. Can the T line be added as a study, or the 8 EMA is the T line? The 8 EMA is the T line. So you just add it to your chart, just like you would add the 50-day simple moving average. Black, 8 EMA, green, 3 EMA, yes. Can you say more about what you do if you were swing trading and not available during the day to look at charts? Just pick charts that you like and enter orders? Yeah, you figure out your trading strategy. If I was looking at this chart right here and I had to head for work, I might say, all right, I'm going to put a buy stop up here. But if it comes up through that level, that puts me in the trade. So even though I can't be sitting here watching it, I can figure out what the pattern will be doing, even based on the trade or on the chart pattern. The cloud sucks. Above T, let's say. If the open is above the close of the previous day, meaning it's beginning of a ticker signal, can you buy right there with a stop below the prior day's open? Yes. And I'll get to some of those here in a minute too. The wick on the red candle hits the T line. Does it have to be the body? No, just the trading. Okay, Don, good. What about exceptions of the T-line rule on the daily chart? Lenny, bring that up when we go to live charts. Yes, and remember, everything we do is based upon probabilities. The fact that you're staying above the T-line says the probabilities are that you're in an uptrend. Does that mean you might not see it trade below the T line and then come back up? That's always the case. That's why I always wait to the end of the day. Bring up Pfizer when we go to live charts. All right, but this is, I'm pointing out the obvious, or the expectation. This uptrend breakout of a fry pan bottom and the fact that they've never been able to close it back below the T line, you have to assume this uptrend remains in progress. When we can see something like this on QuantumScape, and it broke out of our fry pan bottom, what is our assumption? It's going to be in an uptrend. That's what the expectation of a fry pan bottom is. Now, we can break this down to the exact timing. Because look at our double doji setup right here. And notice where the double doji setup was. It failed to get up through the 200, but backed off right to this level, which is where the fry pan bottom started. And we had kind of a double doji, which is indecision, indecision. And we know what the result of a double doji is. If they open up positive, you can be buying because that means the consolidation's over. And if it was buying, it's telling you they've broken out through this level and more than likely going through the 200-day moving average. But here is your long-term assessment. You can see what's happened over the last few months. This big fry pan bottom, it simply tells you there's been a change or a buildup of bullish sentiment on this stock. So it tells me I could be buying here. If I could be buying here because there's our best friend signal, doji gap up. I can also see that they can't get it back below the 50. So I could be buying here and I can be buying here. What's my assumption? The expectation of a fry pan bottom is you stay long as this continues to stay above the T line. And the other factor of a pattern is if we can recognize a pattern. Remember, that's not a one-day buildup of investor sentiment. It's a longer time frame of build-up investor sentiment. So today the Dow was down 100 and whatever. The NASDAQ wasn't showing any strength. And QuantumScape was up $5. So what's that tell us? That sector is being bought. And we know what the expectation is coming out of a fry pan bottom. There's probably more upside. When you were buying options as a proxy of stocks, do you buy deep in the money options to lower? No, Henry, that's also up to each person's risk factor. I'm usually buying the options that I think have the most leverage for the movement of the price. A lot of people ask, well, do you use the Greeks to make your decision? And the answer is no, because the Greeks that were developed in this portion of a stock price movement have absolutely nothing to do what this price movement would be doing. So here's another example of a fry pan bottom breakout candlestick signal pattern having an excessively strong price move, which is the expectation coming out of a fry pan bottom, which has absolutely nothing to do with the theta, beta, gamma, delta, anything else that you can think of in the Greek terminology. This is what I'm looking for, is that new price movement. Norman, that's we'll take a look at Tesla here in a minute. If long, should all closes below the T line be treated equal? Yes. And John, I'll point those out when I go to live charts. Yeah, there's some question there why Elon Musk would put out that question of whether he should sell 10% of his stock when he had to apply for that selling of that months ago. Where is the entry on the last move of the fry pan bottom? Well, we made a lot of money when we saw it breaking out here. We started buying the calls. And notice where it was when it was up here. Very simple analysis. Look how far away you are from the T-line. So what did you do up here? You went to your 10-minute chart. And it didn't show any buying, but observe the obvious. Look where it bounced. Right off the T-line. Now, the reason I keep stressing that is nobody has the T-line on their charts. Or statistically, nobody has. So it's not like everybody's waiting to see what it's doing at the T-line because nobody has it there. They might wait to see what it does at the 50 or the 200 because everybody has those on their charts. But the fact that we took profits up here and saw that it was bouncing off the T-line and opening positive the next day, what did that tell us about the profit taking? It was probably over. We were buying again. Why? Because we could see there was a fry pan bottom, and what's our expectation of a fry pan bottom? A strong price move. So this is not rocket science. This is just analyzing what patterns are developed by human nature and the signals. There's a Morningstar signal bouncing right off the T-line and the T-line. You add those all together. Now we get to the crux of why we're showing all this. It takes the emotions out of your trading. You're doing what mechanically investor sentiment does time after time. You're just putting yourself in the right place at the right time. You don't have to screen for a fry pan bottom. A fry pan bottom will usually make itself evident on very simple scans like the biggest percent price moves. Where'd my mouse go? I've lost the mouse. So right here, that day would have told us, oh, we just scanned for the biggest percent price moves. We can see this little slow curve. We can see there's a fry pan bottom setting up. We can probably be buying on positive trading. Well, it opened lower, but notice what happened when it opened lower right on the 50 and started trading back up. What color candle was it creating? There was another green candle. So who? I can't even read all that. This session is about everything. I want to see your advice on real example, please. You're so who? You're seeing it. This is what you're looking at. If we know all, have the expectations based upon the T-line, the candlestick signals, the patterns, now you're taking your emotions out of your trading. You're doing what the expectations are telling you. BGFV is this Morningstar signal and then a doji sandwich. No, there was no there was the Morningstar signal. There was your doji sandwich, but where was it all this? Where was all this occurring? In the fry pan bottom breakout. The 3 EMA, when it starts moving too far away from the T-line, what's our rule? The further away you move from the T-line, the higher the probability it comes back and tested. That's where the 3 T-line becomes more effective. that when you started moving away from the T line, you watch to see what happens at the 3T line. Also, it acts like a little confirmation fluff that if you see buy signals and the 3T line coming up through the T line, that's added confirmation there's been a change. Is this a McMuffin? Not really. A McMuffin usually occurs down here at the bottom. But isn't it late? Yeah, it's too late now. So when somebody asks that question, it says, is it too late to buy DGFV? The answer is yes. Look how far you've moved. So here's where you get your reverse engineering or your learning moment. Where was the place to start buying this? Well, you can see this is where it started down here with buy signals. So that's the type of thing you want to look at. So we're showing what the results are because of this, but that's not the place to be buying because this is now at best a hold, and because of the distance starting to move away from the T line, you're probably going to be more apt to start looking for sell signals for profit taking. But the learning process should be, well, we saw this building up and we started seeing it break out here. This is where I should be buying. And I'll show some more of this type of thing. So it's not like we get lucky and get into the big trades. The whole purpose of putting the probabilities in your favor is finding the patterns that have the likelihood of a strong price move. We also know that if we were buying right here, to keep our emotions out of our trading, we know that this looks like it's the time to be buying, but we also know where would we be back out of this trade. Well, if this all of a sudden turned around and closed back below the T line, what's our T line rule? We should be back out of that trade, you close it out. That's the process that everybody tells you to cut your losses short and let your profits run, but they never tell you how to cut your losses short. The visuals of candlesticks makes that very simple to say, all right, this trade didn't work. This trade didn't work. Looked like it was breaking out. If you bought it the next day and it closed back here, you had to say, well, this didn't work. This closed back below the halfway point of the candle that told us the bulls were in control. Close it out. And then this trade here told us that we can be buying. Does the J-hook pattern always occur as stochastics overbought? No. Sometimes the J-hook pattern is where the stochastics have also pulled back halfway and then started back up. Couldn't we just say if price and bar is above 8, you may then buy, otherwise under the line you don't buy? You can do that, except sometimes when you move too far away from the T line and you see a buy signal, remember the most important factor of any of this is the signals themselves. Everything else, again, is confirming indicators. Okay, and so if you got, somebody says they got stopped out of Lucid. I'll see if I can go back. We'll go back to, let's do it now. What are we on? We're on 24. So if you got stopped out, that was the right thing to do. But that doesn't stop you from saying, all right, got stopped out right here, or I got stopped out right here because it gapped up in the overbought. It was probably heading back to the T line. So if I got stopped out, now what's my analysis? Well, when it did get back to the T line and then did a kicker type signal, that's pretty strong. You can always buy it back. Back before candlesticks came along, if I happened to be in a strong trade by luck, and I took profits or got stopped out, what was my thinking? Oh, I'm not going to get back into this because they're not going to trick me, whoever they may be. They're not going to trick me and get me back in and then take more of my profits. At least now I know what human nature should be doing and what my support levels are. But if I happen to have closed out here, I could be buying back here because I could see that it was doing a J-hook pattern. Now at least I have a visual format of when to get in and uh, get out and get back in. Henry, yeah, that doesn't phase me as far as what the short interest. We're not buying short interest. We're not buying the fact that insiders are buying or selling. We're seeing what the actual price is doing. Let's see. That's right. Lucid never closed below the T line. Deborah, if you take profits, same scenario. If it pulls back, hits the T line, and you see it's coming back up, you can always buy it back again. So again, this was a screen saying, get ready for the training this weekend. I tell people you're going to be brain dead, butt sore at the end of it. But what you will be able to see is you can look at a chart instantly and say, is this the time to be buying? Or there's my sell signal. They're gapping it down through the T line. It tells me my probabilities are a lot more better to be short. Again, this is the term that we're looking for, the probabilities. You can dramatically improve your analysis and your trading if you just know the signal rules. The doji rule, for example. The price will usually move in the direction of how they open after a doji. The patterns rules. If there's a fry pan bottom breakout, you stay long as it stays above the T line, and the T line rule itself. As long as you see a buy signal or close above the T line, you can stay long until you see the sell signal and a close below the T line. Matt, yes, the electric vehicle sector is volatile, but the advantage we have is we can take advantage of that volatility by seeing exactly what the chart is telling us they're doing at any particular time. Oh, Deborah, if you're in some place and you can't see the whole training, if you want to buy the training, you'll get the recording afterwards, which doesn't mean too much. The only thing is you might not be able to ask a question right at the time that we're doing something in the training, but that doesn't keep you from asking in the chat room or sending me an email to clarify something. And remember, once you pay for one of these trainings, you can keep taking it for free afterwards as a review. Lucid gapped up, yeah, let's see. Yeah, the hardships never. Okay. So are there formulas? Not really. It's visual analysis. It tells us when to enter a trade with a high degree of probability. It also keeps us from getting into a trade that's not going to work, or keeps us from entering a trade, because what do we expect after this breakout? Upside. When they open it lower and trade it lower, that tells us it's not time to buy. But we also have some very simple strategies. Where is the time to buy? If it came back up through this level tomorrow or the next day, that's still telling you your fry pan bottom is working. That gives you much more clarity as far as where your ultimate entry strategy is. The candlestick graphics just tell you when the probabilities are starting to change. We've been short upwards. Today it did a bullish Harami doji in the oversold area. What were we expecting? Wave 1, wave 2, wave 3 to the downside. But what is our analysis, or what is our top criteria for our analysis? The signal itself. So here's something that would tell me, all right, let's close out half the position. If it opens positive tomorrow, we close out the other half. If it opens lower, stay with the half you've got, and maybe even start buying some back. But why are the probabilities changing? We're in the oversold area. We're seeing a bullish Harami, and look where it's doing it, right at that bullish Harami before. That's just visual evidence that the probabilities are starting to change. If we know those candlestick signals, we know that if we're short and they gap it up above the previous day's open, what's the first thing we do? Close it immediately. Because if you're in a downtrend, they shouldn't be gapping it up above the previous day's open. Close it out immediately. Now we can see a different scenario. There's a bullish kicker signal. If this opens positive tomorrow, what do we got going on? Well, there's our bobble breakout with a kicker signal. That's probably now becomes a very strong buy. So the reason that we can keep our emotions out of our trading is if we know the patterns, we know what should happen coming out of a fry pan bottom, a strong price move. We know what happened if you see a best friend type signal, a doji gap up, a strong price move, kind of confirming our fry pan bottom breakout. Came up through the 200, backed off right to the 200 and the T line. What's our classic pattern? A strong price move and then a J hook. So if this opened positive tomorrow, what are we calculating? Wave 1, wave 2, wave 3 being the same magnitude as wave 1, or essentially your classic pattern. We also know where we wouldn't want to be in this if it opened positive and started trading positive. If it came back down and closed back below the halfway point of this candle, what do the Japanese rice traders tell us about the bullish move? Well, if this is the candle that told us the bulls were taking control again, and the bears can close it back below the halfway point of this candle, logic says who's in control? The bears are still in control. So knowing what should happen in pattern signals and the T line just allows you, basically candlestick analysis allows you to be mentally prepared on what to do. So now, instead of trading on any emotional decision, you're just doing what human nature has done historically. So with that, for a 2-day session, if you're a non-member, it's $497. And here is our tricky marketing program. If you're not a member, for $97, you can sign up for a month, get the $200 or $297 price, so you're saving $100, and then you've got a month to see whether everything that you're being taught is working by having a month with our chat room, whether you're in the regular chat room each day or the options room. Plus, you get the Monday night sessions that are like this, but more oriented toward our existing positions. And then we do special training sessions for members during the week, like how to set up your scans, where to set your stop losses based upon the logic of candlestick signals and patterns. Entry strategies. We're going to be doing one on day trading here pretty soon. How much for a member? $297, yes. All right. Will you be recording the session? Yes. It's all recorded, so if you can't get up early enough, what time zone are you in, Jock? I think we started. Oh, Australia. All right. Yes, it's recorded. Okay, so live charts. What do we do to put the probabilities in our favor, as we saw on the ATHA chart, which will probably be recommended? Remember, I put out 2 or 3 stock recommendations every day, not so that you have a recommendation, but we do it in video format so you can see what the logic was that was being recommended. So probably be recommending this one tomorrow on positive trading, expecting wave 3. And then probably saying our stop would be at the halfway point of this candle. So not only do you have the market, people always ask, well, why do you have guest speakers on? Because anytime you can see somebody else's trading style that might fit into your trading style, your personal trading style, or the combination of candlesticks with that trading style, the more pieces of information you can put together to improve your trading, the better off you are. So, darn, I can't remember who showed us this, but this is HYG, which also acts as a good indicator of what human nature is doing. If they're selling off the corporate bond market, that means the big investors are getting a little bit nervous about owning corporate bonds. That means they're nervous about the market. When it's selling off, that kind of confirms that your market in general is selling off. So you can see what happened today on the S&P 500. It opened positive, but even though it didn't, I guess it was relatively flat, it closed near the low end of the range. Told us there wasn't any buying going on. Hold on to your individual ones. Was Johnny Seville? Was it him? Yeah, I can't remember who showed us that. But here is the difference, and this is another element of what should we expect for a positive trade. Obviously, we want to see it opening correctly. Our recommendation today on CPRX was based upon the fact that we had a doji right here at the kind of a breakout area. But if it opened positive, the doji rule said it was going to trade positive. And this is always my rhetorical question. Do we always get big moves like this? No, but we're putting ourselves in positions at breakout levels where the probabilities of being in those positions are much greater. So on ATHA, would you buy if it opens higher, or if it opens a little lower and then goes higher? Yes. So I want to be buying on strength. If it opens right here, I'm going to say, let's not hold off, something's happening. But then if it starts moving up, as soon as it came up through this level, what color would this candle be? A green candle after your bullish signal. If it opens up here and starts trading higher, I'm going to start buying almost immediately. So, where were we? Oh, I was trying to segue into that. We buy when we see the appropriate confirmation, and we need to see the appropriate confirmation. So when we recommended MCRB today, it was based upon if it opened positive. It didn't, so it kept us out of a bad trade. Same scenario on the downside. We were ready to short click if it opened lower. Tell us it was breaking this level or gapped up, told us this wasn't a good short, and just let it go. Here's another confirmation that if you see buying in a stock, or if you see buying in the whole sector, that's a pretty good indication that they're buying the sector. That just gives you that added confidence or confirmation, in this case, that the T line was holding that industry up. And fuel cell. You can see how it basically used the T line as support going up through a resistance level that everybody else was watching, which was the 200-day moving average. What is the electric vehicle sector called? Lenny, is that a trick question? Is that like, when does the 12 o'clock train come in? The electric vehicle sector is called the electric vehicle sector. All right, I was trying to see if they're, all right. Oh, somebody asked a question that if you see, we knew that Blink was announcing earnings today. So here's a little indication. Oh, is there an ETF? I don't know. Anybody know if there's an ETF for the electric vehicles? Riv, all right. All right, and are any of them leveraged? Whoops. Well, that's not leveraged. All right, so there's some answers there for you. I forgot who asked that. Yeah, so back to Blink. This is where we have the opportunity to see what's happening going into the close, to see if they're buying, and if we're buying going into the close, you got to assume the people that are in the know, are following this company closely. You can see whether they're buying or selling. You can even go right down to your 10-minute chart. And it looked like on the 10-minute chart, they were still acting pretty strong going into the close. Now, what happens on some of these trades? Well, they can either blast it up here or blast it down here. So how do you mitigate your risk? Well, going into the close, we bought the 37.40 spread for November, which expires in 9 trading days, or next Friday. Paid 85 cents for it, with the idea that over the next week, if they can get up above 40, that 85 cents now turns into $3. Now, had it done this, yeah, we probably would have gotten out of that spread tomorrow at maybe 25 cents. All right, so we lost 60 cents on a bad. We made $2.15 on a good trade. And that's what's happening in the lithium battery sector, which is LAC, LHTM, which now looks like it's trying to set up for a J-hook pattern. No, Blink is not a bobble breakout. A bobble breakout is usually when they come right up to the resistance level and sell off. This went through and came back. But notice where it was supporting, right here on the T line. I would call this more of a J-hook pattern if it opens positive. It was a November 37, buying the 37, selling the 40s for 85 cents. Robert, if you can't decipher what you want to do during the earnings, then stay out until after the earnings, and then do then make your trading decision based upon what the results were of the earnings. You won't make as much money, but at least you'll have a much better risk-reward factor as far as being in correct trades. Yeah, so Blink was up strong after hours. All right, let's zip through some of these. Groupon keeps acting strong because we can see the pattern. There's our scoop pattern. And what do we expect coming out of a scoop pattern? A slingshot effect to the upside. There's, I think, the 200 up here somewhere. That's where your possibility might be. So this becomes a high probability trade setup. And what improves the probability factor? Look that it bounced right off the T line. Dennis, hold on to your individual ones. Yeah, nothing there yet. Until when I tell Rick to do the double line, then you can put in your requests. Root, it's in the electric vehicle sector, but you can see this one broke out today on a kicker type signal. So what would be our trading strategy? If this opened positive tomorrow, you could start buying it. Okay, real quick, some of the ones that are still performing. Look at your slow curve, fry pan bottom, doji sandwich breakout, morning star signal, and observe the obvious. The T line's acting as support. Matt, this is CQG. I don't recommend this. This is about $1,300 a month. You've got just as good charts on TC2000 or Metastock, which are much, much less expensive. How much money do you need to start trading stocks to see a move? To see a move. Oh, Rachel, you start with whatever you're comfortable with. I would probably start with a minimum of $5,000 or so. OCUL. Now here's one that started up. It broke out, kind of your cradle pattern, but it didn't confirm yet. Where would be the place to be buying this one? If it comes back up through that close, that tells you the cradle pattern's working. Matt is exactly right. Is if you're buying something, if I was buying this one tomorrow, with it coming up through this level, I already know where my stop would be. Wouldn't want to see it close back below the T line. Mac, no, you're not using the whole day. Whoops. You're buying on positive open. So if it opened here and started trading positive, I'd be a buyer. And I'd probably have a stop at the halfway point of this candle. Gree is one, it's coming out of a fry pan bottom, and it's still trading right at the T line. Now, to stay long, it has to open positive and trade positive. Now, the reason we were buying this one is on the charts, it's had a big price move, and it could easily get back up into these areas based upon the previous chart that for some reason ends right there. So if it does move, not only does it have upside potential, but a big upside potential. So you keep monitoring the daily. Yes, my first criteria is, what is the daily chart doing? Because I'm a swing trader. Yeah, so you got the morning. Most of my trades are done within the first 45 minutes of the trading day, which we go through on how you calculate when to get in based upon the 4 quadrants, which we'll go through sometime on an entry strategy. Then midday is just kind of bobbling around. And then going into the last 30 minutes of the day, we'll tell you what they're planning to do the next day. So this is a perfect example of a bobble breakout. It comes up, it fails right at a resistance level that everybody can see. Then look where it pulled back. There was your bearish or your bullish harami, followed by a doji sandwich right off the T line. When it closed right here, we had a very simple entry strategy. If it opened positive, you wanted to start buying. Because what did that tell us? It told us we had a bobble breakout. Now, what's it telling everybody else? Everybody else is watching to see what it's going to do at the 200. We can see what it's trying to do, a J-hook pattern, confirming we can be buying here where everybody else is starting to buy once they see that it's breaking through the 200. Norman, real quick, if the market's opening positive and the stock that I think should be trading positive opens positive, I might be buying it within 90 seconds. And again, this will be 4 quadrants. If the market opens lower and the stock opens higher, I'm going to wait to see if it moves up. If the market opens higher and the stock opens lower, I'm going to wait to see if that stock comes back up through the previous day's close and starts trading positive. And then if the market opens lower and the stock opens lower, it tells me it's not time to be buying. So Kirk, see the 3MA and 8MA make space, make space. I don't know what that means. But there's your bobble breakout, wave 1, wave 2, in wave 3. With the 200-day moving average requiring caution between the 2 lines. Still don't know what that means. With the SMA requiring caution. No, it's just telling you that's where it failed. Now you have a J-hook pattern. Now remember, a J-hook pattern is a up move, a pullback, in this case supporting at the T line, and then wave 3. We just have more clarity to see that it's doing it right at the 200-day moving average. So if you took the 200-day moving average off of here, you still have a J-hook pattern. I don't know what that means as far as the space between the two. Nothing. We're not trading the moving averages, or we're not trading the T line and the 3T line. We're using those as confirming indicators of what our stock price is doing. another one that broke out, you just stay long. Now, remember the logic. If you're above the T line, you're still in a good uptrend. If you're above the 3T line, that means you're still well above or staying above the T line. Just adds more indication that your uptrend's in progress. All right, Chris, we'll take a look at this real quick. Would you say you could have been bought here, Doji Sandwich? You could. I'd probably be more apt to buy it if it came up through there. That would kind of give you a little scoop pattern. All right, so we have charts like this that we were short, but they gapped up and did a doji harami. We closed out the position today. Now, if it comes back down through the lows, we will re-short it. But right now, it's gotten a little bit too iffy. That same scenario was the same analysis in Upworks. With that bullish harami, we closed out half the position. If it opens positive tomorrow, we close out the whole position. Would you continue to enter a trade? No. I only buy a position once, or short a position once. And I use it as an equal dollar amount of my other positions in the portfolio, so that it is just one unit of my portfolio. Now that's stock. If I see something continuing to trade down, I might have bought puts. As it moves down further, I might put on put spreads, which I'm adding a little bit more money, but still have the leverage. So there's a different strategy between buying or shorting more stock or buying more stock and trading the options against it. Apps, same scenario here. You're in the oversold area. You had kind of a tweezer bottom. And you're doing it right here at this same level. We would have closed out half this position. If it opens higher tomorrow, you close out the other half. All right, the biggies. NVIDIA. Notice it's bounced right smack dab off the T-line. So what type of pattern is this setting up? There's your classic. Fry pan bottom, getting ready for a J-hook pattern. What's the J-hook pattern tell us? Wave 1 and wave 3 could be approximately the same. Equal dollar amount, yes. Matt, that's because I want to keep my emotions out of my trading, so each position is one unit of my portfolio. How many people in here have a position that is $40,000 in one position and $6,000 on another position and everything in between? Where do you think you're spending most of your attention? On the $40,000 position. The $6,000 position could move up 25%, and your $40,000 position could move up 3%, and you didn't make a whole heck of a lot of money on the position that moved up 25%. Apple, still in a downtrend. Amazon, still in a downtrend. Now you watch Amazon to see whether it's going to hold the T-line tomorrow. And Tesla. People were mentioning Tesla. There is your indecision up here in the overbought area. Remember, where is it time to start taking profits? When you start seeing them gap up in the overbought area. When they gap it down, remember what a doji gap down tells you. They want to be out with a lot of force. When do you go long? Or when do you close out your shorts? Notice when they opened right at the T-line and immediately traded off, what's our probability, T-line probability factor? We're still in a downtrend. GH, bullish harami, hammer type signal and near the oversold area, would have covered half the position today on a short, would close it out on a positive open tomorrow. Yes, Amazon's still not a very good chart. I probably wouldn't be long or short. You don't have a sell signal. You just have selling, but wouldn't be long right now. And then skin, there's your left-right combo. And what did that tell us about our fry pan bottom breakout? It didn't work. You close it out. Now with the gap down, not only did it not work, but they're selling with great enthusiasm through the support level. Stochastics heading down, that implies there's still more downside. So a bad chart is when something major happens and they close back below the T line. So here's a very simple rule. If this is trading positive and you're buying, it's because it's doing a J-hook type pattern. But if they come back down and close it below the T line, who's winning? The bears are still winning. You close out the trade. So if you know that you are going to have probably about 30% of your trades not working, you close out the bad trade. You don't take it personally. You say, oh, that trade didn't work. Let's move our money to where we got a 70% probability of making money. This is your message. They gap it up. They pulled it back. They sold it. Looks pretty ugly. But what was the message? They gapped it up. So what are we looking at? We're looking to see when the selling stops and the buying starts, because that we had the message they're trying to get into this with great enthusiasm. I'd be a buyer of this one on positive trading because of that gap up. Kicker signal on Freeport. So what do we have here? Wave 1. Look how wave 1 started with your best friend signal. Doji gap up through the T line. Wave 2. Now you've got a best friend signal, didn't confirm, a kicker signal, rounding bottom. This is a pretty good implication that the bulls are definitely in control. BABA. Observe the obvious. Right off the 50-day moving average, they've done a bullish flutter kicker type signal. Bullish flutter kicker signal is merely, they opened here, closed here, they gapped up and did a doji. What do we know about our doji rule? If they open up positive, they're going to trade positive. If they open up positive and trade positive, if you took out this little flutter, you essentially have a kicker signal off the 50 through the T line, breaking this downtrend. A pretty good implication. Wave 1, wave 2, you're going into wave 3. How do you determine wave 1 to that? You can just look at it. There's wave 1. There's wave 2. What do we know about wave 3? Wave 3 usually is the same magnitude as wave 1. And it's more effective when you see a J-hook pattern. Now, here's another aspect of a strong signal. This looks like a strong signal, but it was based upon somebody recommending or upgrading this stock. So you have to be a little bit more skeptical, doubtful, because this isn't something that's changed investor sentiment. This is just supply and demand out of whack for a few days because everybody that's following that company or that analyst that upgraded it are buying. And when that buying's done, you have to see what the rest of that pattern was doing. APPH. Look at your best friend slow curve breakout. I don't know what that is. Now here is an added benefit of having a chat room where everybody's looking for the same signals. This was pointed out by Marshall. Are you in here tonight? I think you pointed this one out. You can see the dojis right here on the T line, the gap up through the 50. This one I would be buying on positive trading tomorrow. That's telling you they've broken the downtrend. They've broken the 50. They did it with a kind of a gap up best friend. That's an implication you're starting an uptrend. How can you tell that? Because that should be the analysis we get from looking at other charts that have that same type of setup. That's our expectation. Now, does that mean, which one did we just do? I don't know whether you would call that wave 3, it's just, but you've got the same setup that tells you the probabilities you're heading higher. Does that mean this will go up the same as net? No, it just tells you it's going up. And how long do you hold on to this one? Until you see a sell signal and a close back below the T line. Here is that fry pan bottom breakout, a pullback, and then they closed it right back up here. Here's another one that you could be buying on positive trading tomorrow. Because the breakout and the profit taking is over. It shows it's supporting at the 50 and you use the T line as support. That's a high probability trade setup. Again, this is all related to how do you keep your emotions out of your trading? Just by knowing what a pattern should do and what it shouldn't do. Same thing on VIPs. There's kind of your bullish flutter kicker, best friend gap up through the 50. Another one that has the prospects. Look at your little kind of kicker type signal, followed by this doji sandwich gap up through the 50. That's got the implications of going into the next wave. Boy, I'm going to have us way late tonight. EPC, same scenario. There's your fry pan bottom J hook breakout. Look for a 45 degree. Genko, here's your best friend signal up through the T line, bounced off the 34, J hook pattern. This one can be bought on positive trading tomorrow. Let's see, now we got some that we're repeating, so I'll skip through those. There's our potential of a bullish flutter kicker signal. Bearish candle, gap up doji. If this opens positive, which way is it going to go? It's going to go positive. Does J hook have a wave 2 for the pullback? Yes, that's the wave 2 is the pullback. No, on something like this, when you know what the signal is setting up for, that if they gapped here, they gapped it up above the previous open and started trading positive, you could be buying at any time during the day. Because what's it implying? Strong buying after they've supported the T line, you can buy any time during the day. That's the point of using the T-line to tell you let me get through down here a few more. Oh, ride. This is another reason why if you were going to do something going into the close, you probably do it with an option or a spread. Because what did we want to see happen from here? Trading positive. I think ride reported and it's trading down here somewhere. SI. There's another J-hook type bullish flutter kicker signal. This opens positive. Got a bullish flutter kicker giving you this little scoop type pattern. That becomes a strong buy also. All right, so the market heading down, Twitter is a good example of when to go short. You can see how it was rolling over, failed the T-line, broke this level. I'd be shorting this one on weakness. Even though you're in the oversold area, you're now looking at wave 1, wave 2 that failed right here at the T-line. Wave 3 could be the same magnitude as wave 1. I don't know, what are the pre-market futures? The pre-market futures do not matter at this time of day or night. The only time the pre-market futures mean something is 10 minutes before the market opens. Look at your dumpling top, opposite of a fry pan bottom, and then notice your gap down. That's implying there's a lot of selling force, more downside. Bumble. Look at your slow curve. Wave 1, wave 2, going into wave 3. Where are the probabilities of getting big price moves like this? When you can see the pattern failing, or the buying failing. Bearish engulfing, close below the T-line. Just keep one statistical factor in mind. When you're closing below the T-line, the probabilities expand tremendously that you're going to be in a downtrend. PCT, you can see the slow curve, the failure at the T-line, they start selling it off. That puts you in positions where the probabilities are much greater that the trade, if you're short, is going to go in the direction you expect it to. Same scenario on FIGs. Now, FIGs tried to bounce back up right off this support level, but Stochastics heading down. If this one opens lower tomorrow, you could be shorting it, because that means this was a failure of that buying. I think we did PLTR earlier. We covered this position. However, you're not in the oversold area yet. You've got a bearish kicker signal. They're gapping down. If this starts trading lower tomorrow, we'll be reshorting it. Hold on to your individual ones until I tell Rick to do the double line. We're almost there. So this is what we're going to be analyzing this weekend. Big bearish signal. We were up above the T-line. When did this all change? Look how they gapped down below the T-line. That changed the probabilities tremendously. And OSCR. Anytime you see something close below the T-line, close it out, because the probabilities of it going up have gone against you. What's the worst case scenario? You close it out, and then they do another buy signal. You can always buy it back when it comes back up above the T-line. So how do you take your emotions out of your trading? By using the probability factors of the strength of your signals and what it does at the T-line. Again, we're going to be analyzing when you buy, when you continue to hold, even though it looks a little bit dicey, the probability factor never changed because they never closed below the T-line. Okay, so with that, are there any general questions on candlesticks? If not, Rick, go ahead and do the double line. And in 2.6 seconds, do the next double line. Right now, there's only two stocks that I've recommended for long term. One is Ford Motor Company, because I put that in the classification now of a electric vehicle company. The advantage, though, of Ford is it's not a startup company. It doesn't have to build facilities. It's already got the manufacturing. It's got the distribution. It's got the marketing. Now all they're doing is adding a new product, electric vehicles. We started buying this a couple years ago at 6 with the anticipation that it would eventually get to 24. We'd still be a buyer of this one. PPSI, that's a toughie. You can see how it closed below where it opened today. That's not giving you very good confidence. If I was long, if this opens lower tomorrow, I'd close it out. Again, there's one statistical probability factor. You see a big move like this, and they open it lower the next day, close it out immediately. The probabilities of it moving up is 90% or less until they get back up to that level. Ruckus, you're gotten up here in the overbought area. You did a doji. What's the doji rule? It's going to move in the direction of how they trade after doji. You would have set your stop right there at the low of the doji. Logic says if it comes down through there, they're not going in this direction. More than likely, it's coming back to test the T-line. You could buy this one now. I'd probably be more apt to buy it if it comes up through the high of today. This one, same scenario. If you're long, you can stay long. If you happen, I would have closed this one out here. You could be buying this one back on positive trading. Might not be the best one to buy, so your next criteria is, do I buy this one back, or is this the best place to have my money? Are there charts out there that look more like this that have better upside potential? Momo, that's kind of a J-hook pattern with your best friend type signal. If you're buying this one on positive trading, just watch to see what it does once it gets to the 200-day moving average. See if it gets through. Bidu, that one I'd be buying. A bullish flutter kicker signal off the 50-day moving average. Up through the T-line, breaking this downtrend. Wouldn't be afraid to be buying that one. Whoops. Baba, same scenario. Bullish flutter kicker has a potential of wave 1, wave 2, wave 3, the same as wave 1. Would take you up to the 200-day moving average. Alcoa, kicker type signal. You could buy this one on the basis that it's probably heading back up to the top of the channel. CVS, Morningstar, left-right combo support at the 50. I'm sorry, at the T line. There's your classic pattern: fry pan bottom, J hook. GM, also a good chart. Oh, what's that? Breaking out through this level, again, couldn't close below the T-line. Look for wave 3. Not your most exciting mover, but it's a good, strong chart. eBay. Well. eBay is pretty much a nothing chart. If I was anything, I'd be staying short. That's about it. Still below the T-line. Let's see. They were talking about dock end and it moves one way or the other. Right now, as long as it stays above the T-line, you can stay long. Alcoa, kind of a kicker signal. Remember, a kicker signal, you want a big candle, big candle. But the fact that they gapped it up off a bearish candle still gives the implication of a kicker type signal. The semiconductors, you can see supported right on the T-line. If this opens positive tomorrow, you've got a bullish flutter kicker signal telling you there's going to be more upside. The Qs, they closed below the T-line. See, I'm going to take a look at the YM. YM shows the market, the Dow will open up a little bit. I don't know where the Qs are right now. They're up a point. So it looks, but again, the indexes do not matter at this point of the night. You want to see what investor sentiment is 10 minutes before the market opens. This one's a J-hook pattern. You stay long. This is path, as long as it stays above the T-line. Rio, that's a good gap up, but it must trade. That's an ADR. That's why it's so choppy. But you could buy it if you like it above the T-line. And Vuzi, nothing here to get excited about. It needs to break out of this, what looks like a wedge pattern forming. Beazer Homes. Kicker, breakout, look for a 45-degree off of here. SCCO, kicker signal. I'd be buying this one on positive trading tomorrow. Did we do Ruckus? Ruckus, we don't stopped out. I would suspect it's coming back to test the T-line. G-Pro did a nice strong signal. A kicker signal coming out of the slow curve, fry pan bottom. Up through this, I would suspect a 45-degree off of here. PQ, best friend signal. That can be bought on positive trading. JKS, Jenko, best friend signal. This one can be bought on positive trading. Sophie, yeah, it'd be kind of a message. It's not a real good looking chart because once it hit the top of the channel, it sold off. It probably wouldn't be one of my first ones that I'd want to be buying. RVNC. Eesh. That's a nice little slow curve. You could be buying this one. A gap to fill up in this range. Car Gurus, look at your inverted hammer doji, then another bounce off the T-line. You just stay long on this one. Omer, Well. I'm hitting everything except what I'm supposed to be here. Just stay long. David, that's kind of your bullish flutter kicker. Take out this little flutter, you got a kicker signal. That I would suspect has more upside. Look, Marshall, you were ahead of me. Yes, bullish flutter kicker signal. Well, for crying out loud. Yes, not. Myrna, stay short. FedEx, stay long. Coin, how am I hitting so many wrong letters? Fat fingers. Coin would not be long or short right now. I would be going short if it comes back down through today's open. What can we be done about this, if anything? Why am I not receiving anything from forum? You're on Yahoo. Whoops. Response environment came from that Yahoo are outdated on their server and started becoming in Is there no control of this? The only solution would use another email address, not using any mention. Yes, WB, that's the problem. Those servers are blocking emails. There's nothing we can do about it from this end. I don't know if anybody can do it by complaining to those servers from their end. So, again, every morning I put those morning and afternoon comments in here in the chat room. But if you want it from email, you have to send in if you have another email address, you can use that one. We're still long this one. Yeah, notice where it bounced, right smack dab off the T-line yesterday. So this was a sell signal. Your hanging man, bearish confirmation. Without the confirmation of closing below the T-line. Stay long on this one. Did we do AVNW? Nothing of any great consequence here, probably until you get back up through the 50. Southwest, stay short. There's your dark cloud. There's your close back below the T-line. We did CVS. PHP, that one you could be buying because of the kicker type signal. Just watch to see what it does once it gets to the 50. XCEL, not coming up. SKLZ. Oh boy. If this trades flat tomorrow, I'd close it out and wouldn't buy it back until it breaks up through this level. News had a big price move. So you have to go see what the news was that created this move. And then if you were long, it has to open positive. If it opens down lower, you close it out and you buy it back if it comes back up through today's close. Tesla, stay short as long as you stay below the T-line. Vivo, you can stay long. It doesn't have a real clean reversal signal. You stay long, but you be a little bit more attentive to the first sell signal. Now there's a kicker signal that took you up through. That one you can stay long on. MULN, kind of a J-hook pattern. Classic pattern. You can buy this one on positive trading. Weight Watchers, you stay long, but notice you're having problems. If this trades flat tomorrow, with stochastics in the overbought area, I'd close it out. You can always buy it back if it comes back up through this level. AMD, J-hook type pattern, you stay long if you've stayed long. AFRM, that's still not a very good looking chart. I would probably not be long or short this one. Open, same scenario. Those aren't good looking charts. You can see there's no buying happening after they open. NVIDIA, you can still buy this one on positive trading going into wave 3. Roblox, this one has to open positive and trade positive. I'd have a sell stop just below today's open. If it comes down through there, they're coming back to test the T-line. KPLT, nothing great here. Another one that if I'd been long and it opened here and started trading down, I would have closed it out. Wouldn't be buying this one back until it gets up to this level. QuantumScape was the second long-term hold because of its product, the solid-state lithium battery. And because of this longer-term chart, a big fry pan bottom. This was trading up at 130 at one time. If they ever get their battery into production, get it fully approved, 130 might be peanuts compared to where it could move. Pfizer, nice reversal right off this morning's star signal. The gap up, staying above the T line, you just stay long on this one. JP Morgan, nothing. That's kind of a nothing chart. I'd be someplace else. Radius, if I was short, I would have covered the short today. Then I wouldn't be long or short. This is kind of a nothing chart. If you're long, you can stay long. You obviously need to get through the 200 and this resistance level. It's just not a very exciting looking chart right now. Haynes, yeah, you could be shorting this one. If you're in the overbought area, I usually set my stop at the low of the doji, of the wick. I think we did Groupon. Groupon is still this scoop pattern slingshot effect to stay long. Gold futures right now they're down a little bit, but you can see the December contract is still trading up above the 3T line, let alone the T line. Not any signs of pullback yet. I would use, if it came back down through today's open, that would be a sign. Right now, this is after hours, trading off a little bit. You do have a bearish harami, but you still need to see confirmation. Daku, you stay short. Oh, I don't know. Let's see. I wouldn't call it a head and shoulders, but I would definitely call it that spike bearish signal. And stochastics heading down. I would stay short on this one. Is there a replay for this video? Yes. We'll probably have to get it out tomorrow once Rick gets it to Abraham. Bree pulled back. Again, this was coming out of a big fry pan bottom. You stay long on this. Right now we're out of it. But if it starts coming back up toward the top end of the range, we'll get back in because it's not going to move up here. It's got the capability of going up to 70, 80, 90, up into that area. KPTI, you can see it's rolling over. Whoops, came back up. So you definitely want to see this open positive. I'd put a safety stop at today's low. If it came back down through there, it's telling you this level right here is kind of a resistance level, and they're starting to sell it off. It is going up to force support. It could be. Or it could be ready to roll over. You have to see what it does. Rio can gap big time overnight. Yeah, it's traded overseas. That's why it looks so gappy. TMC, I don't know why that. Not TMC for some reason not coming up here. This is recorded, yes. All right, anyway. Las Vegas Sands. Well, what the heck's going on here? No, I wouldn't short it yet. You can see there's an uptrending channel. It's sitting right on the 50. If it opened lower, yeah, then I'd be shorting it after you're bearish engulfing and then non-support at the 50. No, I would be looking to short this on weakness. At least you'd figure they're coming back down to test the lows right around the 34. There is a gap right here, meaning they could come back down and test the 50-day moving average. No, Matt, a kicker signal is a kicker signal. It has a gap in it. But I'll let you learn the difference between a kicker signal and another gap. If you want to buy high profit candlestick signals and patterns, that will show you all the strong signals and patterns. Zeus still above the T line, but it would have to open positive. Would you buy this on positive trading? Yeah, I'd want to give it a few days of confirmation. News partner selling singles are confident through. Okay, I can't help but to think that those tacos coming in. Okay. How do you find your stocks? Dan, very simple. Use a scanning software. You can either use Metastock or CC2000. But once you put all your formulas in or your signals in, it just takes a matter of a couple of minutes every night, maybe 7, 10, 12, 15 minutes to find the best trade setups. We'll do a scanning session here again in the members area fairly soon. ALGN, Jake, it has to open positive and trade positive to stay long. Otherwise, if it trades below the T line, there's your evening star signal telling you they're backing it off probably back to the 50. Yeah, Jay, so that's why you'd watch to see how it opens. Well, Pfizer is an institutional trader, yes. But you can see the pattern. So even though it might not move very much, you know the direction it's going in. Maybe do some spreads up here, giving you much more leverage. That doesn't help you on call options when it gaps down. That's true. LPLA, if you're short, you stay short. You're getting in toward the oversold area. If I was short, I'd have a safety stop up here at the just above the T line. WTI, they're all selling off. Oh, what happened here? How come So the oils you can be shorting if they start trading lower. Silver, still in an uptrend, trading off a little bit after hours, but I would suspect they're at least going to touch the 200. And crude oil, kind of trading flat at the $81 area. Right now, not really moving. So this is the difference, being able to analyze. You can see where the big bullish signal was. You can see the J-hook pattern, the J-hook pattern. And then you started seeing sideways. So what's that tell you? It's moving sideways. So if I was trading something, I wouldn't be trading crude oil right now because it's in a sideways mode. It's very easy to go through the commodities real quick. Right now we can see that corn is trading in an uptrend. Wheat is trading in an uptrend. So you can very quickly scan and find out which commodities you want to be trading. We will be doing a commodity trading night here very soon. For the T-line, does it matter whether you use simple moving average or exponential? The T-line is the 8 exponential. I would short this one if it opens lower and starts trading lower. You can't short it though. I don't think they short stocks, allow you to short stocks below $5. DM, another one that's kind of junky, but still traded up a little bit today. That's kind of junky. I'd be a buyer on positive trading, but you eventually want to see it get through this level. Nothing here. It had a nice bullish best friend, but it didn't confirm, and now it's non-confirmed with a trading. Oh, MGI, no, I'd just be out of it. There's nothing on that chart right now to tell you to be in it. For the T-line, doesn't matter whether you, we did that, Dan. It's exponential. Yeah, so that's what you have to be careful of, is if you see a big price move, you've got to check to see what the volume was prior to that. What and where can I find the TC 2000 setup to do this scan. Oh, I think all our scans are already at TC 2000. Okay, so right now, remember, the probabilities are things are trading lower as long as we're below the T line. So with that, oh, I've kept it way past bedtime. We'll see everybody bright and early in the chat rooms tomorrow. Again, if you want to join us for our 2-day training, you're going to get a lot more than your money's worth. So with that, everybody have a good evening. We'll see you bright and early tomorrow.